everyone. Today, I'm continuing our series on cross-border financial and tax challenges. This series is based on a 6-month consulting project I completed for a Chinese parent company and its U.S. subsidiary. What I'm sharing today is the final part of this case study. In the previous episodes, I discussed how the domestic CPA without an international accounting background had some questions about payroll treatment and U.S. GAAP accounting standards. I also provided consulting on how to configure QuickBooks, including setting up user permissions. If you enjoy this type of content, don't forget to like, follow, share, and save this channel. I regularly post insights and real-world cases from my experience working with cross-border finance and taxation. Part 3. U.S. Taxation Overview. In this final part, I'll focus on the tax-related issues we encountered. As many of you know, the U.S. tax system is highly complex, with federal taxes at the national level and additional taxes at the state level, depending on where the company is registered. Each state has its own tax rules, which often differ from federal tax laws, making tax compliance particularly challenging for both companies and individuals. Let's look at some of the key taxes this company had to deal with. Corporate income tax. The U.S. subsidiary needed to file corporate income taxes at the federal level. Franchise tax. Most U.S. states require companies to pay an annual franchise tax. This is usually calculated using a greater of rule. Companies pay either a minimum flat fee or an amount based on a formula, whichever is higher. Alternate minimum tax, AMT. This ensures that profitable companies pay a minimum level of tax. If the regular income tax calculation falls below the AMT threshold, the company must pay the AMT instead. Foreign income considerations. If the company has overseas income, it may also be subject to special reporting and taxation rules on that income. Employment taxes. If the company hires employees, it must withhold and remit federal and state income taxes and pay Social Security contributions. If it hires independent contractors, it's required to issue Form 1099s. State versus federal taxes. It's important to understand that state tax rates vary, and some companies choose to incorporate in states with lower or no state corporate income tax. Nevada, for example, does not have a state corporate income tax. However, this doesn't mean they're completely tax-free. They may still be subject to other business-related taxes and fees. Filing deadlines and complexity. U.S. tax filings involve multiple forms with different deadlines, both at the federal level and at the state level. Each state has its own due dates and filing requirements, which adds to the complexity. In this project, I helped identify the relevant tax types and filing deadlines for the client. While I provided preliminary guidance, I strongly recommend consulting with a qualified tax professional, especially one familiar with cross-border issues. Key takeaways and management recommendations. To wrap up, here are some key action points I suggested to the management team. 1. Plan ahead. Many U.S.-based teams only handle bookkeeping quarterly or annually. This is risky. Monthly bookkeeping ensures smoother tax filing and avoids delays and penalties. 2. Ensure continuity in accounting staff. Staff turnover can significantly impact both day-to-day financial operations and timely tax filing. 3. Hire bilingual, cross-border professionals. Having someone who understands both U.S. and Chinese financial systems and is fluent in both languages can greatly streamline communication and reduce errors. Training domestic teams in U.S. tax and accounting is also valuable. 4. Use advanced accounting tools. Consider using QuickBooks multi-entity version to separate data, consolidate reporting, and reduce manual processing time. 5. Invest in expert advice early. Cross-border finance is too complex to be handled with patchwork solutions. It's better to spend a small amount on proactive consulting than to pay hefty penalties later. If your company is facing similar challenges, feel free to reach out. I'm offering a free white paper with financial and tax case studies, or you can schedule a paid 30-minute consultation.